Holy flippity flip flop flap and smokes, everyone. Australia's housing market crash is on track to be worse than the US 2008 subprime mortgage crisis, as Australians are facing mortgage Armageddon. Ladies and gentlemen, I know it is a religion in Australia, the housing market. House prices only double every 7 to 10 years. House prices only go up. You got TV shows like The Block, Sydney $1 million listing. People in Australia are completely obsessed in the housing market. And that's for good reason. Over the past 30 years, it has been a surefire bet to become a millionaire in Australia. Just buy a couple of houses and you're golden. But people, eventually all good things come to an end. And we have just got huge new amounts of data, new amounts of information to show that house prices are not only falling, but they're crashing. We got new devastating mortgage data. We've got new data from the Reserve Bank of Australia on what they're going to do with lifting interest rates, and also data on inflation, which leads to higher mortgage rates if inflation doesn't go down. So even though why Australians may not be thinking about inflation that much, you have to pay attention to this. So everyone, we got so much to cover. I know all my Australian viewers have been dying for an update, so let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, so this just in, Australian raises key rate and signals further tightening ahead. What happened today? The Reserve Bank of Australia lifted interest rates by another 0.25%. But people, I think Philip Lowe is an absolute coward. Inflation is accelerating. It is getting worse. All other central banks are doing 75 basis point hikes. We have a stronger economy. Wage inflation is lower, but we're taking smaller rate hikes. Why are we doing that, everyone? What is wrong with Philip Lowe? I'll tell you what it is. It's because of Australia's property obsession. And because what normally happens in Australia, people take a mortgage, the banks test to see if you can afford mortgage rates at 3% higher. Well, rates are about to go up by 3%. So what this is going to lead to is a lot of homeowners having to force sell their properties, because a lot of people are on variable rate loans here in Australia, 60%, compared to the US where most people are on 30-year fixed rate mortgages. So Bloomberg reports here, it looks like the RBA is now set on a string of 25 basis point increases, and they see the risk of rates peaking closer to 3.8% or a little higher. Now we can see this chart here of our rates compared to what the US is going to be. People think the US will peak around 4.7%, New Zealand 3.9%, and Australia here just down at 3.4%. But people, again, this is simply not going to be enough, because we just got a new inflation report and it was more than hot, it was red hot. Look at this, Australian inflation accelerates to 32-year high and yields gain. The consumer price index advanced 7.3% in the 3 months through September from a year earlier, compared with a median estimate of 7%. So all the economists, all the experts were saying it's only going to be 7%. Well, it came in much hotter at 7.3%. So why is the RBA not lifting interest rates by half a percentage point or 75 basis points like the Federal Reserve? Because we can see clearly here that inflation is going to get worse. Also, what this is leading to is the Australian dollar to absolutely crash. So all of those people that are planning to go overseas, go on a holiday, well, your purchasing power is going to be a lot less now, thanks to Reserve Bank of Australia not doing their job and not doing what they need to do. Look at this. This is a chart of the Australian dollar. We can see it was around 75 cents in April, and it's now plummeted all the way down to 64 cents. And the RBA even admits inflation is going to get worse, and they're saying it's going to peak around 8% late in the year. So if they know it's going to get worse, why are they not doing more rate hikes and more rate hikes now and run the risk of letting inflation get out of control? Because if you lift interest rates too high, you can always lower them again. But once inflation gets entrenched, there's no stopping it. But what you're wanting to know is, okay, is the housing market beginning to crash, and how bad is it going to be? Well, we just got this data with interest rates going up, with inflation getting worse. What that's going to mean is interest rates are going to have to go higher and higher and higher, and house prices are going to start falling faster. And we did just get some new data today on how much house prices are falling, so let's have a look right now. Look at this, Australian home prices fall for 6 months in a row as interest rate rises by. So a property data firm CoreLogic said home values across the country fell a further 1.2% in October from a month earlier, with the median home price now at $721,000. Now people, you may think 1.2%, that's not much. But remember, this is just in 1 month. When you annualize that, that's price declines of 14%. Now remember, like 2008 in the US subprime mortgage crisis, home prices didn't just fall in 1 year and then stop. It went on for longer than 2 years. And this is what I think is going to happen in Australia as well. Now let's break it down state by state to see what were the best performers and what are the worst performers. And then I'm going to go over some other data that's going to show that house price declines are going to get much, much worse. Okay, look at this, everyone. Sydney down 1.3% this month. Melbourne, 0.8%. Brisbane, 2%. Adelaide, 0.3%. Perth just down 0.2%, Hobart down 1.1%, Darwin down 0.8%, and Canberra is down 1%. Quarter Sydney's down 5.3%, Melbourne 3.1%, and Brisbane 5.4%. So Brisbane led the boom, and now they're going to lead the doom. Now combined capitals were down 1.1% over the month, and combined regionals were down 1.4%. So yes, house prices are falling. And you know what's funny? A lot of people thought that house prices falling in Australia was impossible. I once had a friend that was using credit cards to buy an investment property, and I told him, hey, you shouldn't do this. There's always a chance that prices could fall. And he told me, no, didn't you know house prices can't fall? They have to go up 3% every single year because of inflation. They can't actually ever have a year of decline. This is the mindset we have of many, many Australians investing in real estate right now. They have no idea of how much pain they're about to be facing. Because in Sydney alone, prices are down 10% already. Because this man here, a fellow Michael, a buyer's agent, he's saying here, his patch has experienced some of the largest falls in value since interest rates started going up. He said the biggest falls were hitting the premium ends of the market, but overall prices were down between 10 to 20%. So that's another reminder, everyone. The Australian housing market isn't just one housing market. Like I showed you, every state, prices are falling at different rates. City and every suburb in that state will fall at different rates. So you may be watching in your area, you may say, well, prices aren't falling, or you may be in another area and saying, yes, prices are crashing, actually crashing worse than this. And now here's another dire warning from the Reserve Bank of Australia. In its latest financial stability review, the RBA said that its rapid rate hikes could see some homeowners forced to sell their homes because they could not meet their mortgage repayments, with first home buyers and those on fixed rate mortgages among those at risk. And that's exactly right, everyone, because unlike the US where rates are fixed for 30 years, 60% of Australians have variable loans, or even they have interest only loans. A lot of people fixed their rates during 2020, but they're about to expire too, and this is going to lead to mortgage Armageddon. Now I know what you're saying, well, no, Michael, the government will be there to save the day, they'll bail out the housing market, they won't let it fall. Well, people, we are going to see a once in 100-year housing market crash event, because what's made house prices go up for the past 30 years is interest rates started at 19%. And every time there was a crash, the RBA could drop interest rates lower and lower. Also, Australians weren't in much debt. Well, now they're the second most indebted nation in the world, with debt to GDP of around 180%. So consumers can't take on more debt. Also, the governments can't create huge amounts of more stimulus because inflation's so high. Look what happened to the UK when they tried to announce huge amounts of stimulus. Their bond market nearly collapsed and their pension funds got margin called and nearly went bust. So no, the government won't be there to save the day, and look how bad it's going to get. So now with the latest increase, the average mortgage rate is now at 6.2%. And what that means for an average homeowner with a mortgage of, say, $500,000, from the trough to the peak, their mortgage payments are now increased by over $800 a month. And a lot of families simply aren't going to have an extra $800 a month, and they're going to be forced to sell. Now you may think, well, yeah, I can afford $800 extra a month. It's going to be very hard, going to be very tight, but maybe I will be able to do it. People, again, this is not the peak of interest rates. The RBA is still going to have to lift interest rates at least another 1%. So look at another chart here. The bond market is forecasting interest rates are going to have to go to 3.94%. And again, with a $500,000 mortgage, that's a 54% increase in mortgage repayments, and that's going to be an increase of $1,197. Maybe people will be able to afford $800 extra a month, but I don't think there's any way the middle class are going to be able to afford an extra $1,200 a month in their budget when everything else is going up at the same time. Yes, maybe if only mortgage repayments are going up and nothing else was going up, maybe they'll be able to afford it, but gas bills are going up, electricity is going up, council rate is going up, insurance is going up, groceries are going up, absolutely everything. This is broad-based inflation. So they're taking hits from all angles, and eventually something's going to have to break. They're going to see they've got a lot of equity in their property, and they're probably going to be forced to sell that to continue their standard of living. Because again, another chart here to show you comparison of how bad Australia is to our other peers. This is a chart of household debt to GDP. We can see here Australia's at number 1. We can see here Canada comes in second, then New Zealand, United Kingdom, and the United States comes in 5th. So this is just more proof and more data to show this crash will be worse than the US and the United Kingdoms. Because what do they say? Well, inflation's great because then that means you get a pay rise. Well, Australia actually has also the lowest wage growth of them all. Another chart here, ladies and gentlemen. Look at this. This is a chart between Australia's wage growth. We can see here it's just over 2.5%. We can see here New Zealand's much higher, Canada's much higher, United States, United Kingdom, and European Union is much higher as well. So what this means is the Australian dollar is crashing and in real terms your wages are falling, this means Australia's purchasing power is getting absolutely decimated, and they're simply not going to be able to take it much longer. And this is all the RBA's fault because they're not doing their job by lifting interest rates high enough to stop inflation. And I think they're going to fail and fail big time because the RBA has a very, very poor track record. Remember when they said, don't worry, interest rates won't go up till 2024? They've failed to hit their GDP targets. They've failed to hit their wage growth targets. This is a central bank that's had failure after failure, even worse than the Federal Reserve. So what I expect when house prices really start to fall over 20%, which could happen easily, especially in areas like Sydney, Melbourne and Brisbane, which has been so inflated over the past 2 years, we're going to see the economy start to crash as well. Because right now the Australian economy has held up pretty good compared to the US and other peers, but this is all going to come to an end because the Australian economy is not very complex, is not very diverse like our peers as well. You know what they say here in Australia, all we're really good at is building houses and digging holes. Also, China is what got us out of the 2008 financial crisis with their construction boom, but China is going to contraction this time. They're not going to be able to save us. And I don't think we're going to see a big building boom in Australia either, with mortgage costs going up, and we're going to see a lot of builders go bust as well. So everyone, I know what you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? What this means is, everyone, inflation is going to get worse. The Reserve Bank of Australia is going to have to lift interest rates much, much higher than 4%. Mortgage rates are going to skyrocket. We're going to see forced sales. Buyers are going to leave the market, and we're going to see the housing market crash. Once the housing market does crash, then we're going to see the Australian economy crash. But what do you think, everyone? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.